Hey, I'm AnnRileyCaldwell, not your ordinary agent, realtor here in the Middle Tennessee market, and I'm here with
Matt Wilson with the Wilson Mortgage team at New American Funding.
So what we're going to do is talk about some of the key terms that you often hear related to mortgages and give you a definition of them so that you actually have an understanding of what they are from somebody who actually knows what he's doing. You're not just Googling it, you're not just reading a dictionary term, you're not just asking your next door neighbor. So here we go. Okay, Matt, what is a DTI?
So DTI stands for debt to income ratio, and basically what that means is it's the amount of your total monthly payments, not the total indebtedness, but monthly payments divided by your total monthly gross income. And really in the lending world, we use that to determine how much money is going to be left over after you pay all your bills. And that helps us understand whether or not you'll be capable of paying a mortgage in that amount.
The other question we get a lot is, what is a discount point?
So a discount point is 1% of the loan amount. So the amount borrowed, not the total purchase price. But the discount point essentially is there so that you can pay more on the front end, and then that will lower your interest rate over the lifetime of the loan.
How much do most people need in order to get into a home initially?
You can actually get into a home for cheaper than signing a lease and putting a deposit down in a lot of cases. I would say that assuming a first-time homebuyer situation in Tennessee, that you could get into a home for about $1,500.
So it seems self-explanatory, but a lot of people get this wrong. So what is the real definition of a first-time homebuyer?
So other than the obvious first time buying a home, if you haven't had home ownership over the last 3 years, then for most first-time homebuyer down payment assistance programs, you requalify as a first-time homebuyer. In addition, there are a lot of different divorce situations that can requalify a newly single parent as a first-time home buyer again.
So most people think they know, but what truly is a credit score and why does it matter?
So a credit score is really just like a computer algorithm that determines interest rates across almost any mortgage or consumer loan. But it's determined by how well you've paid past bills, how well you have maintained not maxing out credit cards, how long you've had credit history, how much credit history, how many accounts have you had credit on. All of those things go into creating a credit score. And what I find is that most of the time people think they know, like paying off this car loan will increase my credit score, but maybe it doesn't. So the issue that you often run into is just most people don't know the rules to the game that they're playing, and once they find out that you're actually best off to pay down credit cards and have a high available limit, they can get a lot further in their credit score game.
So when it comes to making a decision about whether or not you think that you are financially able to buy a home or move to a different home and sell the one that you're in, who are some of the people you should not listen to?
Your neighbor, probably your mom, probably your Uncle Bob, probably anybody that's not a lender, and definitely not Google.
So tell everybody really quickly, Matt, what is a down payment and how much do you maybe have to have or not have?
So a down payment is really the borrower's skin in the game. So you're going to buy a house, say it's $100,000, ha ha ha, yeah right, but we'll pretend. That's $100,000, and if you put $10,000 down, you have a $90,000 loan, you have $10,000 in down payment. As far as minimums go, there are actually down payment assistance programs that will not only cover your down payment, but some of them will even cover a part of your closing costs.
So Matt, tell us what closing costs are.
So closing costs can really be broken down into 3 or 4 areas. The first area are the lender fees. That's where you will see discount points. That's where you're probably going to see something like an origination fee, an underwriting fee, a processing fee, a doc fee. They call them lots of things, but they're all the same thing. The next section is really your title fees. Those are all things that are done by your title company that helps close and facilitate the transaction. And then you've got your taxes, and that's obviously the piece that goes to Uncle Sam. And then you also have your prepaids. Prepaids are essentially where you pay for your next year's homeowner's insurance when you buy the house, as well as potentially pay a portion of what taxes will be due for property taxes next year.